All right, give everybody a couple minutes to load in, and then we'll get moving here. All right, give it another minute, then we'll get moving here. All right, my mic is not working. What the fuck? Don't know why. Hold on, let me restart my mic. You guys hear me okay? Let's try now. All right, cool. Sometimes it doesn't pop up that I'm talking. I don't know why. All right, let's get moving here. Apologies in advance. I've been a little bit under the weather the last couple days. The beauty of Chicago weather is you go from 75 degrees to 40 in 24 hours. My body hates that. So, for those that are new, this is mostly for you guys. If for those that have been here and understand, how the platform works and the data and its importance, a lot of this is going to be covering the basics. We'll go into a little bit more, advanced things and ways that we kind of can look at this probably in later sessions. But for now, really want to stick with the basics. There seems to be, pretty good amount of confusion across the board, not necessarily from our end, but just in general on social media with how to use this data and how it kind of all works. As right now, we get a nice sell program, probably off some oil news. So, for those that don't know me again, my name's Joe. Work over here with the options depth team, and obviously, I run steamroomtrading.com. So, we're going to go over again the basics here of Gamma and Charm. And then if you guys have questions as I'm going on, please type them in the live chat. We can look at what kind of happened today. Some of the positions that we saw, some trades that you could have potentially took off of this, and then, again, we'll stick with the basics, what we do. So again, apologies, slightly under the weather, so I have to chug some water, but we'll get moving here. All right. So obviously, this is the option depth platform. This is what we're talking about. It's very, very a simplistic platform. This is how I have my dashboard set up. Anybody that's on here, you guys can have your own dashboards. There are tutorials on how to set all of that up and edit it and do what you want with it. For our purposes, we're just kind of going to talk about how I have mine set up. So what are we looking at here, right? This is a big heat map that you see on here. It's right now, it's very lightly shaded, right? There's not a lot of color going on versus if you look to the right, you see a lot of color. Right now, if you look at this this setup here. You see above here in this section here, this is red, right? And then down here, you're starting to see the blue, and then everything else in the in between is kind of white, right? So what we're talking about here is gamma. And anything that's in a red color is negative. Anything that is a blue color is going to be positive. I'm going to hide these other pieces for now. We'll talk about those individually. But what we're getting from this picture is an understanding of what dealers have to do based off of what happens with price action. Right. So when you look at all of this, people like to convolute it and make it really confusing and say, oh, well, look at all these levels and we have to do this here. It's not really how it works. Gamma is going to always be reactive to price action. So what we're trying to understand is what the environment that we're trading in. Right. So when you're looking at this, you're trying to make not an assumption, you're trying to make a determination of what environment you're in from a gamma perspective, first and foremost. So anything that is going to be below this black line, which is our flip line, is going to be positive gamma until you get to these other flip lines. It's a little bit tougher to see because these values are light. If you look at the top left corner of that box, you'll see how it shows like 31, 31.15, right? That's a lower value, right? So it's not like a high gamma environment from a positive or negative side. It's just lightly positive is what we would say. When you guys are looking at above this line now, you'll see the red or the more intense colors here. These are your negative gamma, and we call them pockets, right? So anything above this line, this long line, is a gamma flip level. Above that would be negative gamma, below it would be positive. And you'll notice the same thing kind of gets pushed out from the positions as we get towards end of day with these little half circles. And all this is looking at a positioning of SPX dealers across the board and how that gamma is going to be interpreted on the heat map. So what I mean by that is if I were to go down here, this is how I have my breakdowns. Left side is customer positioning calls. Right side is put positioning from customers as well. The middle I have for market makers. And all we're seeing is this type of market maker positioning push out on to this map. That is what is called like contributing to all of this. And then obviously from a zero DT perspective, these take not precedence over other levels, but they're the largest levels that you have to pay attention to on an intraday basis, mostly because gamma is largest at the money closest to expiration, right? So if I have a long position or the market makers have a long position, let's say it's 6,600, the gamma from today's positioning here, where I'm showing a net of 4,600, is going to be larger and more important on a zero DT basis than, let's say, that same position that you have 30 days out, right? Because gamma is always going to be largest, closest to expiration, closest to at the money, right? So that's what you're seeing when you see these half circles that pop out. These are larger gamma levels that are only going to start poking out onto this actual map when they start to matter closer to end of day. So not that you're not paying attention to them, it's just that's why you see these random half circles to understand the flips. And all of these black lines are just giving you an easy way to visually understand what environment you're in and how you're going to start flipping, right? So right now, price is below this dark line, right? So we know that we are in a positive gamma area. However, because the value is only 31, it's a very small positive gamma area for now. So price action has the ability to be just a little bit more free when we're at neutral to no gamma, just in general. Now, why does this matter for us? What are we gaining from this? Like, what is the value for all of this? Well, one is really just understanding the environment that you're going to be trading in. So when you're in a positive gamma environment, you have to understand that dealers are going to be trading against what happens with price. So right now we're selling. So in this area, dealers are buying futures. How many futures they have to buy, we won't really get into because that's deeper into the whole delta hedging dynamics. And for most people, that gets too much into the weeds. So we'll start with this. But if that's something you guys are interested in, we can always get into the math in subsequent sessions. But we know that when they're in the positive end, they're going to trade against price. Now, since these values are small, it's not a significant amount that they have to trade against. And that's a key thing to understand. If we were in an environment where there was a lot of positive gamma, then the speed of all of the price action would slow down as dealers have to trade against price constantly. And I need to redo these so they have some branding from options depth, but this is what I kind of use, and I just want to show you. So like what I mean by the positive and negative side is something like this. Let's use this as an example, right? This is an options depth map. There's a lot of positive gamma here. We're slowly just kind of going down little by little. And then we get to this big area here, right? This big blue node. And we know that price is probably going to slow down significantly as dealers have to hedge against it and they start trading against it. So while they're selling, dealers would start buying. And then we look for these for potential reversion trades or support or bounces. How you trade this is kind of the art of all of it, right? So you can make, we're using this to have a better understanding of where things can go and how we could trade it. But it's really up to you on how you want to do that. And if that's, again, if we're talking about execution and all of that, there are different ways that you can play, something like this, right? For in this example here, you could have just got long, there's ways to sell premium. But what we're trying to understand right now is just the environment in which you're trading and how positive and negative gamma works. So now you guys can see the difference. See how lighter this map is in comparison to this, right? That's showing you how much positive gamma there is, or the lack thereof of gamma. And the map changed dramatically from what you see now to what we were talking about last week, right? So if I go back to let's just go to Wednesday of last week. I really need to get better at turning all my tabs off before I do these. Eklava, yeah, yes, I will. Apps. This is already recording, so this will absolutely be available post. All right, let me shut down some of my stuff so this doesn't lag. It's my fault. Come on, now you know you want to go back. All right, let's just go back to this day. And we'll swap back to a different one. Okay. Once this loads. All right, so this one was still decently light into Friday. Let's see what Friday looked like. Okay. So you see, I mean, it's not a perfect example of it, but you see how there's just a little bit more intensity in some of the colors in certain areas. Like, and you look at the values here, right? You're talking 300, right? And that was a lot of because what happened, you had OPEX on Friday, right? So a lot of we call it gamma rolling. Gamma rolls off into other strikes further out and things along those lines. So that's that's why you see some of this lightness for now until more and more positioning starts to show up. Now, on the flip side of this, right, we just talked a little bit about positive gamma and what it does. Like, we're now looking at the top side here of what negative gamma can be. So we're not in a negative gamma area right now. Negative gamma would start as we get above this flip line here at 65.86. And when we're in a negative gamma area, all you have to understand is it's going to be reactive based off of price action, and they're going to trade with whatever happens with price. So if we get into this pocket on the upside here, right, there is the potential as dealers start trading with price for them to move with a little bit more volatility, right? So when you think of positive gamma, think of quenching of volatility, and you think of negative gamma, think about a potential expansion. And the key word of all of this is potential. Nothing about gamma is actually directional, which is a big misconception here. It's all going to be reactive based off price action, right? So just because we get into a positive pocket doesn't mean that we just can't keep, free falling if they want to do that, unless you get into a massive, massive positive gamma area where it's going to be tougher and tougher to break through. And the same thing on the negative side. Just because we get a negative pocket doesn't necessarily mean it's going to be crazy volatility. It's just going to react to what happens on the price side. Okay. So if you guys can just understand those basic and simple concepts, that's really what matters. And the easiest way, and this is what I showed last week too, for those that are not new to me talking about this, is to think about gamma in a 3D landscape, right? So this is going to always look confusing. Everyone always, when I show this, they think I'm like messing around, like, how does this make it easier, until they actually understand the analogy. And all of it is think of spot price going up and downhill. Positive gamma is going up a hill. Negative gamma is going down a hill. The more significant the negative gamma is, the larger this little downside pocket is for price to increase with speed. Think about it rolling a ball down a hill. The steeper the hill, the faster price can pick up as we kind of go down there. Think about the opposite on the upside of the landscape. If you have a lot of positive gamma, like you see on this ridge up here, price goes up, it slows down, right? Because dealers start going against you. So this is the easiest way to visualize how this works, and obviously in a 3D way to make it better, easier for people to understand if they're looking at a heat map and be like, I don't understand what this actually means. Everything's in a 3D lens. And then the easiest way to take that 3D is to put it on a 2D heat map, because this is just easier to see than worrying about all the crevices that you see across the board on, the 3D map itself. Okay. So anybody have any questions from a gamma perspective so far? Anything? Anybody? Is this making sense? Do you guys understand the importance of gamma and why we look at it? And then I'll show you guys some stuff from today on how you could have interpreted it for trades. Cool. All right. So a couple ways that you could have done some stuff today. Let's go back a little bit. You guys notice options depth here. We post like a pre-market key levels that is posted in the morning, and those are great. Like, it's important to see where the market could be. And then what's even more important is to be able to take what you see in the morning and adjust it as time goes on, right? So we are looking at a snapshot here about 30 minutes before for the open, okay? You see how right now, where if you were looking at just the pre-market data, we have just this massive negative gamma pocket, right? And by massive, I'm not saying the size of the negative gamma, I'm saying the range, right? So you have a flip all the way up here to positive, way up at 66.57, and then the downside is way down there at 64.38, right? So when you're coming to look at this in the morning, you could say, okay, I see that we're going to be in this negative side, but if you saw what happened as the day went on, and we go right back to where we were, when people started layering into their 0DT positions, all those flip lines changed. If you were just looking at the pre-market data, you would still think we're in some sort of negative pocket right now, and we're not, right? So that changing of the heat map that you see is as people have layered into 0DT positioning throughout the day. So if we go back and you look at what to see, this is 8:50. Let's go back to 9 o'clock, 30 minutes before, right? So you can see the lack of positioning, right? This screenshot, again, is 30 minutes before the open. You see the lack of. And what I mean by lack of is there's not a lot of size, right? So when you're looking at this and you see this call right here, 65.95, you're looking at 50 calls, 84 puts. It's meaningless, right? It's meaningless for our purposes to sit here and try to figure out what we can do with this, right? Like, we're not going to pay attention to this small, minuscule level because in the grand scheme of things, it doesn't matter. But what did I look at instead? Well, I want to see where we cluster. So when I come in the morning, I want to see where we have potential positive gamma clusters so I can have an idea from where price might be. And even more important, if I can see where I think people might layer into positions as time goes on. You'll notice the longer you look at this, that when there are larger strikes in different places, and I'll show you this right now, people like to layer around them. I can't explain to you why. They just do. It's just how they look at it, right? We're not in the business of trying to guess as to why if somebody does something. But if you look at the pre-market, I want you to pay attention to this cluster down here. And it's all created from these puts. So when I go, let's go a little bit further off the open. Look how much larger all the sizing got, right? So when we go back, none of this was really sitting there. So now that everything changes, the entire profile changes because you have so many more 0DT positioning. So I know going into the day when I'm looking at this, right? The positioning's light. I'm going to need to wait for some updates. That's how I would interpret it, right? Positioning's light. Let's see how people layer in because it's going to make adjustments to where I think things can go. It's great to have a pre-market plan, totally fine. But now the plan changes as things kind of go on. And now you can see some of these more positive gamma clusters start to come out, right? And that's where we're looking for support and resistance in the grand scheme of things, is where all these clusters kind of sit. And maybe I can make some trades off of them, right? And that's what you see pop here onto the map. And you see how different it is. Like, this screenshot was taken an hour after the open. Negative gamma, still sitting here, flip lines on either side. and then just the small positive pocket. But if I keep going forward as positions changed, watch what happens. Well, what happened just there, right? Price moved. Look at where the flip line was in a 10-minute span. It went from 65.32 all the way up to 65.74 as positions changed, right? So this is the beauty of having these intraday updates. That changed everything. Now, if you look at price and what happened during that time, let's go a little bit further. It's tougher to see the lines, but if you notice, like this little dashed white line, it's tough to see right now because of my color scheme, but this is where we're taking the snapshot of the information. And you'll notice that now the gamma flip line is below price. We're in a negative pocket. There's the potential for there to be an increase of speed or as dealers play with price action. Same thing down here, right? Price started to get to this gamma flip level and it kind of bounced off. Now, the question is when price got there, what was going on with the actual gamma at the time. So if I push this forward a little bit, let me go. It's uploading the new data. One sec. Kakashi, can we interpret decks? Yeah, we could talk about that. We won't do that on this one because that's getting into some more weedy territory, but we can. I'll write that down that's something you guys would like to cover. Come on. And my internet is not doing good today. All right, let's try to go back now so you guys can see how it changes. Okay, here, good. We don't even have to go back very far. Let's go here. Okay. So what we were talking about was looking at why this matters, right? And how you could potentially trade off of it, right? A lot of this can get confusing, I know, but the basics are if you're establishing a pre-market plan like we talked about, and then as positions change, it's just understanding where there's potential inflection points, right? So in this example right here, this dashed line is when I took the snapshot. Okay. So I know that price right now would be sitting at what 65.70. I know there's a gamma flip level up here at 65.85. Well, what happened over the next 6 minutes? We pushed up into that gamma flip and we rejected, right? And it's a simple trade. You don't really need to know complex math to see how you could take that as from an information. But if you're only looking at what the pre-market map showed, you'd never see this. You would never see that people layered into 0DT positioning to create and change these pockets. And more importantly, as time went on, because positioning into the morning was so light and people are adjusting it, you know that this map is going to be constantly changing today. And there's going to be days where you don't have that, where it's like, yeah, people kind of sat in their positions. There's micro ones moving around, but the range has been established and we're not changing much. Today is a unique day where we're all over the place because people are in and out of positions, and you see it here, right? When we go back, these lines are constantly changing on a 10-minute time frame, right? These kind of held, and then it went higher as people adjusted their positions, higher, and then watch what happens when we go to the latest. Completely changed. Now we're in negative gamma, right? But it's basically flat. So you see what I mean? Like when you go and are looking at the positionings pre-market and you see how light it is, you just know that all of those 0DT positions they come in through the day are going to affect this map so much that you're going to have to be checking it constantly. And there are going to be other days where there's a lot of positioning. You don't have to check it as much. Like you'll understand that there's an established levels from a gamma perspective. There's established levels from the charm end, and you could just kind of watch for inflection points on those ends. And the other way that you could potentially trade all of this is just looking at the larger strikes, right? Like this is the beauty of having this, saying, okay, well, 65.50, that's a big level. Well, if you guys go look at what happened in SPX in the last 7 minutes, where did we hold? You can see it here, 65.50, right? There's a reason for all of that. And the same thing above, right? We're starting to see this a little bit of compression here, where you have a gamma peak coming out from this positioning up here at 6,600, which you can see from this green line. and you see a bigger strike here at 65.50. So you're compressing on it. So you're looking for, just looking, you could trade this multiple ways. You could trade it off the gamma peak, you could trade off the flip level, but just know that your positioning is constantly changing. Makes sense? Does that make sense? Apologies if I'm a little all over the place. Like I said, I'm hopped up on medication at the moment, so I'm a little out of it in all honesty. All right. New makes sense. Okay. Good. You guys are getting it. All right. So now let's talk about charm. And this one will be good because today's is interesting. Today versus Friday is interesting. Okay. So I want to go and look at charm. So charm, what we're looking at with charm is how a dealer's book changes with respect to time. Okay. So if we're looking at, and my colors are different. The blue is the same, but I changed the yellow to this pink so it can stay coordinated with how I look at the gamma bars. And all of this is changed. PGO, if you want to change all of your colors, you're just going to go into market maker exposure here, and then you're going to go here and you can change your color scales, right? Peaks, troughs, you can change all your colors. You have to do it in market maker exposure. Um, and you can adjust it any way that you want it to be. And then if you want to change the positional insights like I did, you'd go in here, you'd go down below, and you adjust those here. Change your colors any way you want, which is the beauty. So if I go back, all right, so we're talking about charm. Charm is obviously how the book changed with respect to time. If charm values are positive, that means the dealer's book is increasing in delta with respect to time, and they'll have to sell futures as to passively as time goes on, and vice versa. When the values are negative, that means their book is losing delta. They'll have to buy futures as time goes on. The values of charm are always the largest at end of the session, and you can see it here on the color. Now, all of these, I don't pay attention for right now, for right now, of these like half circles. We'll talk about that later on. What I want you to just understand is if we go back to the morning session and you're looking at your charm, we use this as like, I just call it guardrails, right? So this is where I look at where the path of the day could potentially go. So when I look at this morning, I go, okay, I'm looking at a top here at 6,600. And a lot of times, price likes to fade off of charm flip levels, right? It's one of my favorite trades to take, in all honesty. Get to a charm flip, you can get a reversion trade, or if it's on the bottom side, you have potential support. Okay. So when you're looking at all of this, obviously this changes as positioning comes in the same way that I was explaining the book being a little bit lighter this morning. The same thing is going to happen kind of now, just in a little bit different. So when I, push this forward, you'll notice how that charm flip line went way higher as positions came in. Okay. So when we're looking at this, again, we're looking for just like the guardrails. This is where the path price could go, and it usually follows it. And you could see how it kind of followed it even from the morning positioning as things changed. We got up here, kind of faded, and kind of came off. Now, this is the part where I think sometimes people can get confused because of the way it's portrayed. Is people look at charm, and because we're looking at this from a directional standpoint per se of what happens passively, they think price has to do something. It doesn't. And today is a perfect example of this in comparison to Friday. So if I go back and I show you Friday's session, OPEX, you look at charm values. This black that you're seeing here is where the flip line was. See how we just followed, path stayed along this price, right? It had this nice wind against it for selling. And then you notice how the color gets really intense towards end of day, right? Because charm values are the largest towards end of day. Well, there's a lot of positioning here, and this got really intense. So how did we play this? Well, if you're looking at once we got into this, you're noticing here on the charm side, right? It says 225.31. Okay. Well, if you just take some simple math and you double it, say 225, right? It means they're basically selling, we'll call it just under 500 contracts over the next 5 minutes, right? From a selling perspective. Can that be absorbed by price action? Yes. But if you guys have traded long enough, end of day, especially the last hour, that's pretty significant, right? From a liquidity standpoint. So when you're seeing us get in this pocket and we've seen this trend slowly going down, you could play off of this and say, hey, I think we might go lower and take a trade based off of what you're seeing here. And sure enough, we did until we got some Trump news and they did that pop. But this is a significant amount of points you could have gotten 65.11 all the way down to 64.87. That's a nice trade, right? You're not going to probably catch the whole move, but you'll notice like this is it following the correct price path until you got into this big, higher level of charm. And then we kind of went down. Today, it's a little bit different, right? Price has not just instantly sold off, right? And this is where the confusion comes in. Just because they have to they have to net passively sell does not mean we're just going to go down. The values are important. Again, we're getting our guardrails. We'll look at the guardrails for right now. We can go all the way up to 66.47. We can go all the way down to 63.83. This is a massive amount of range. So I'm not that I'm not paying attention to it, but the values in these pockets are minimal, right? So right now, 11. Okay, that's 20 futures that they have to sell over the next 5 minutes. Is that significant? No, it's not. So today's a little bit different. We're not following the price prediction paths, and I wouldn't say prediction, but it's not following just whatever the wind that is created from charm, right? We went high or lower, and that's understanding the environment. And this is something that you can't see on this is we're very much driven by Iran and oil right now, right? So a lot of what you're seeing here, not that it completely goes away, it's just you have to take what you see here with a grain of salt based off of it takes one dumb headline to change what's happening right now. When we get into the more stable markets, right? This charm path that you're seeing here is always going to have a lot of, value in what you're seeing. And it still does today. It's just right now the range is wide and the values are not large. Sure. So if I go to session open, meow, let's go a little bit higher. All right. This is what the snapshot looked like pre-market. And then we'll fast forward so you can watch it. We'll watch how charm changes positions kind of came in. Let me get this to load real quick. Kevin, it should. If it doesn't pop into platform support and let Yusuf and them or OD support know, and they can help you see the boxes up on top, but you should be able to see it. Okay, so let me go forward a little bit. Let's go get this to the open, and then you guys can watch how positions came in and adjusted everything. Okay, so this is what you had in the pre. You can notice that if you marked your levels down here, we faded off of this a bunch of times. There was obviously more to this than just, the charm stuff. But if you watch how it adjusts as positions come in, this is 10 minutes after the open. Now we're 20 minutes. Notice all of the positions and how they're changing towards end of day as they came in. Keep on moving. Now there's a big jump. Well, why? Well, my guess is if I go down here, I bet you there was a big position change of some sort. Right? So someone is adjusting their positions, it's going to change. And you could see how it is affected here. You could see that put spread. Look at 6,500 down there, right? Someone came in, sold a put spread, right? Positionally, you can see what they did. So that changes the values. So you guys don't see these lines, these charm flip lines, Kanagi, on your platform? I'll wait for you can respond, but I'll keep going. So you guys see how it's adjusting, right? Now positions come in, it starts to move. So it's moving, goes higher, positions are moving, same type of thing. And then as positions are coming in, and then when people start closing, this will change too. All right. So if we move this forward now to where we're at now we kind of have more of an established area and where charm could go. And you would, again, there's so many places it could go at this point. You can't use this as a way right now to really say, hey, we're going to go here. If we were riding the charm flip level down like we did on Friday, then you have a good way of looking at this. So if I go back on Friday, You could see it. Like my black line here is what I have for neutral. But you could see how we rode this line down. Right? We just kind of followed it until we got to significant values of charm, and then we just continued to sell. Right? So there's going to be days where we just kind of move around it, and then price action wants to come in, they want to sell. You get it to a big area of charm. You could take that as a way of saying, "Yep, I don't think they're going to be able to absorb all of that selling," and kind of can follow as it goes on. But it was following the line all day. You could see price just stay near it. Right now, on today, we are in the middle of nowhere in charm. So there's a little bit of a less. What are you going to do here? What kind of trade are you going to take? You're not. You're just going to understand that they got to sell, and you're going to pay attention to end of day, right? And that's where these half circles come into play. So I'm going to zoom in. These are obviously flip lines for charm, where they swap from being suppressive to supportive. So if we're end of day and this value stays here and we get in, let's say, I don't know, with 20 minutes to go, you're sitting here. Well, who knows? You might be able to play a little bit of a pop higher. You don't know. You got to see what price action wants. But if you get into a big cluster where there's significant value, something has to happen. And you could trade it that way. You can try to ride the trend. Now, again, as you guys know, end of day, lots of liquidity. Anything can really happen. That's why I like to use the data early on. But this is where you could play for potential pins, end of day, where they like to pin between different charm areas. Same thing on the gamma end, or if you're trying to ride a big cluster of charm in a certain direction, you could do that too. Carnegie for the lines should be able to go in here and adjust on the color scale, the 0 line. So anything that you guys want to do on your dashboards, it all gets established through the market maker exposure or positional insights. So if you want to change your colors and all of this, you can go in here and adjust it. And if you want to do anything on the positional side, you go here and adjust it. Me, I like those levels. So that's why I made them nice and bright for me. Because it's something that I trade all the time. Okay. So that's charm. Now, something that I didn't talk about last time too, that I do find a lot of value in, if we're just talking about the basics, this is obviously the basics of gamma and charm, is actually just looking at the positioning. Now, you're not going to necessarily gain like insight that, oh, someone came in and bought a bunch of calls, we have to go higher, we bought a bunch of puts, but you can see how things expand to give you a much better understanding of what people are kind of betting on per se for the day. So like if I go here and we talk about how positioning is really light, this is just the way that I interpret the data and how I use it for potential trades. But this is light, like I said. Okay, well, if I keep going forward, we start to see the positions come in. There's a couple things. And again, we don't have Captain Condor right now, but we are going to get some spread trades. I know there's 2 spreads already sitting here, pre-market, right? I have a sold put spread here. I have a sold put spread here. Okay. This is all muddy. I'll call it muddy on the call side when it comes to understanding what someone's trying to do. We don't know. I really don't even know what they're trying to do down here, but I can make an assumption that this looks like a put spread. We get to the open, what happens? Well, someone came in and layered on top of it. These got larger, right? So more sold puts, a little bit more here, a little bit more here, right? So I'm like, okay, these people, if you're trying to understand what they're doing, are making a bet that we don't go below this level. They're trying to collect premium, right? So I'm looking at this of like, okay, well, that's interesting to me. Now what happens on the call side? Boom, someone comes in, sells a long call, they sell their call spread. So now you have someone betting in some way of us not breaking this and not going below this. Does that mean we don't? No, it doesn't mean that we can't. What I'm looking at now is for these and being like, okay, this is great for me because they're betting that we don't go anywhere and we sit in this range and they're going to collect their shekels. But I got gamma levels to play off of, right? I got some, especially if people layer in, now I got some clusters. I got some levels that we might not be able to break. And if you look at the one on 6,600, for instance, where did we top out on the day? 65.95 off some programs. And on the bottom side, we really haven't done much. We have sat in the range. So they're collecting their premium, right? They're collecting what they were betting on so far. I'm not using this in a way of saying, that's what I'm going to go do. But if you're looking for positional insights, it's the best way to understand what people are betting on an intraday basis, right? And then all of this ends up on the gamma heat map and the charm maps, so you can make some trades off of them. But I like seeing this. This is my favorite thing to see because now I know I have some clean strikes to play into. And they adjust. The person took half of it off right off the bet there. Actually, what I would actually gather is they actually did not change their spread because this one didn't change. I bet you somebody else went long calls there, and that's why you saw the adjustment. And that's the key note. I actually don't know. I have to make an I'm interpreting the data the way that I need to. Okay, so this is another way you can kind of look at all this. You get full on positional insights. I mean, where else can you get that information? You can't. It's all signed. Any other questions? Cool. All right. Well, like I said, I wanted to talk about the basics here. I know a lot of people, this is all fresh and new. We can always dive into much more advanced topics as we go on. Apologies again. My head's a little bit foggy, but we'll have a recording of this. The one I did previous is probably even better than the one that I did now. There's a recording of that if you guys want it as well. And we'll do another one of these on Thursday. Maybe we'll have some more positioning to talk about and some trades that were taken down. And I can, talk about what I've been doing with some of this information. Joe, are you talking about the recordings? Yeah, let me drop the link for you guys. I'll put it in can you guys see recorded sessions under events? Like two steps above? Okay, cool. I'll post it there. I'll post the previous one. That one is really good. I wasn't sick, so it was a little bit easier to kind of go through everything. But yeah, you guys got both of these. I'll do another one on Thursday. Bring questions. Like this is for you guys more than anything, right? If you have questions, Anu, who's in here with me, is one of my people, and he's been asking me 50 questions probably every week, and it's great because now I can have a better understanding of what you guys are trying to understand or look at, and it could get pretty nuanced or it could be very basic. The point of all this is to not complicate your trading. The point of all this really is to put probability on your side. That's what we're focusing on when we do all this. Is I know what has to happen from a hedging perspective to help me or put myself in a position where I might have a higher probability of taking a trade. And what you're deciding to trade or how you take the trade, it depends, right? Some days you're going to see a trade and you're like, oh, I can take a fly and I could play a call or put fly, which are my favorite ways to play a lot of the profiles. Or you could say, you know what, I'm just looking for mean reverting trades off of flip levels. Okay, you could do that too. That's kind of the beauty of all of this is there's a ton of different ways to skin the cat as long as you can understand the environment and interpret the data in a way that makes sense. Right. So for me, I like to do a lot of scalping or I do a lot of flies. Yeah, exactly right along. This is something that just takes a lot of time, and covering the basics is something that even I go back to all the time when I'm looking at all of this, right? The basics are gonna set the foundation for you to be able to see more and more things on the profile to get better at this. There is not a one size fits all approach to reading this. Anybody who tells you that, I I mean, without being mean, they're just full of crap in my personal opinion. There's so many different ways that you can use this data to trade, right? It's all, but the basics don't change. The basics remain the same for everybody. You know what positive gamma is, you know what negative gamma is, you know how charm works, right? And then when they start building out the volatility dashboards, which I'm really excited about, we'll have a whole new thing to talk about with the VIX because not only do you have SPX, you have VIX positioning, right? And there's a way to use that and to add, pieces to the puzzle to put probability on your side, which we can always talk about, right? So that's what we're really doing with all this information, just trying to increase probability. And then you'll understand that there's different strategies that you can play to, take advantage of whatever you're seeing. When we're in an environment that's very much driven by headlines, a little bit tougher, but at least you can understand the environment and whether or not there's the potential for expansion of the volatility or for it to be quenched. What would be great is if you got a headline or something like that in a negative pocket that pushed you into a massive positive gamma cluster or a flip line above that changed everything. Well, that's probably a high probability area for you to be able to do something off of it. On days like today, where it's just lighter across the board, there's plenty of ops. Look at where we're bouncing right now. We've been holding 65.50, this gamma level, for since I basically started talking, right? It's slow, but it's holding. Does that mean you're going to take a trade off of it right now? No, but all the other times before we got the puppy, you possibly could have. So that's just, how you interpret the data. And, over time, it'll still be easy. You guys will look at this and be like, yeah, I can formulate a plan on what I think should happen. I can formulate a plan and understand what I'm looking for. And then you mark your charts and you just wait, right? Patience is the key here. Or you can play it in a more advanced style where you're like, yeah, I'm going to take a fly. And then now it's just a timing thing. So we can always dive into more of that as time goes on too. So I'll post these out for you guys. I'll catch you guys on Thursday. Hopefully, I'll be a little less under the weather, and we'll do another one. But thank you for tuning in. For those that do not have an Options Depth subscription, I will drop a link below on X for you guys to take advantage of a 10% off promo that we are running, and you guys can try out the platform yourself. And we'll catch you guys on the next one. Later.